All right, we're just gonna go over some stuff and some laws and things you need to know. The first thing is premium diversion, and I'm going to explain to you from the FBI's website what premium diversion is. Premium diversion is the embezzlement of insurance premiums. It is the most common type of insurance fraud. Generally, an insurance agent fails to send the premiums to the underwriter and instead keeps the money for personal use. So basically, if you have a return premium and that return premium doesn't make it back to you, it goes into the checking account of the insurance company. Okay? They will send it to the insurance company. They're not, I don't know how it does this, but they're not really supposed to. It's supposed to come from the underwriter straight back to your finance company. That way all the calculations and everything can be done just like that. But if your insurance agent requests, because that's the only person that can request an insurance premium, like in my case, my insurance premium was split. The only person that can request that I know of is the insurance agent themselves. So if your insurance premium is coming from the underwriter and ends up in the insurance agent's checking account, the business checking account, you better be on the phone and calling somebody, because that's not where it's supposed to go. It's supposed to go straight to the finance company. All right, but that is premium diversion, is when the premium gets diverted and the insurance agent just keeps it to go, play golf or whatever. All right. Insurance fraud occurs when an insurance company, agent, adjuster, or consumer commits a deliberate deception in order to obtain an illegitimate gain. Okay, so if they keep your money, and it goes in, there is no law that says that a return premium has to be in a separate checking account from the insurance company's regular checking account. There is no account balances from there that I know of. So if the return premium comes from the underwriter and goes into the checking account of the insurance agent, it is not separated from the other general money, which is a problem, because to prosecute an insurance agent on premium diversion, you have to prove that they are using that money, specifically that money, for their own personal use. It says personal use, it doesn't say company use. So if they take somebody out to go play golf on a company expense and that money is in their checking account and there's no law saying that there's a separation of that and no accountability for that, then you're going to have a hard time prosecuting an insurance agent for premium diversion. And that's a terrible problem in the state of Mississippi, and Mike Chaney needs to fix that, which I doubt he will do. All right, so let's move on. Move this over here. All right, now this is the law from the National Consumer Credit Protection Act of 2009. NCCP, National Consumer Credit Protection Act, 2009. And it says, a credit assistance provider, finance company, after making reasonable inquiries and taking reasonable steps to verify information, make a preliminary assessment about whether the consumer's contract or changes to the consumer's contract will be not unsuitable. Right? So if it's not suitable for the consumer, how's that read to you? If you're some lawyers out there, you chime in on that and see on my case how this would affect me under the Consumer Protection Act, because I haven't seen any protection for consumers in the state of Mississippi when it comes to insurance fraud at all. But that's what that says. So let's move on to first insurance funding. All right. Here's a lawsuit to first insurance funding from an attorney general, okay, of a state. And it says right here, I'll tell you this: the defendants purposely and secretly increased the cost of their clients' insurance by tacking on undisclosed excessive agency fees. That means that your insurance agent tacked on some money and you're paying it and you had no idea. They just hid it in the paperwork somewhere. A.G. Haley said this should serve as a notice that we will guard against any company taking advantage of customers by using deceptive tactics, particularly where the price of a product is difficult to fully understand. That's Attorney General Mara Haley. From where, I have no idea. But this was April 16th, 2015. Now, this was in April of 2015. Now, come down here. In November 2011, First Insurance Funding Corp. agreed to pay $340,000 to the AG's office for allegedly facilitating the defendant's agency scheme. The two companies allowed the defendants to roll hidden fees into the amount financed by the clients. See that? So when they did the finance agreement and when they did the contract, they hid hidden fees in there. And nobody knew it. Because, I mean, you know, commercial insurance is complicated. So while the clients believed they were financing only the cost of the insurance premium, they were actually financing some hidden fees that they didn't know about. And so there's one lawsuit in 2015 against First Insurance Funding out of Skokie, Illinois. And I also had an insurance agent review my account, and he said, "Where does this 10% come from?" I said, I don't know what you're talking about. He said, "Looks like they put on an extra 10% for something." I thought, I don't have a clue. And you know what? You won't either. All right, here's another one from First Insurance Funding. Alleged premature cancellation of auto insurance policies by premium finance provider leads to recovery of $200,000 by a Massachusetts Attorney General. The AG settled with First Insurance Funding, a premium finance provider, for $200,000 to resolve allegations that it illegally and prematurely canceled certain financed auto insurance policies. Now, if you work in an office, you can understand how sloppy a company is by how they just screw things up and just let things go and don't pay attention to stuff. I mean, what customer service representative would let this happen in their office? What manager would let that happen? So anyway, there's another lawsuit against another Attorney General against First Insurance Funding. This is funny. This is an ad looking to hire a person for First Insurance Funding. And it says, the assessment management collections representative, which is the person that I talked to that told me that it was not their problem. This is the customer service representative. Look here. Management collections representative is responsible for minimizing delinquency for a portfolio of agents. So basically, hey, just, you force them to pay. You care if it's right or wrong, just force them to pay. With an emphasis on customer service. Now, I called First Insurance Funding many times, and they told me it was not their problem, that they were overcharging me. A high level of professionalism. Down here it says, this is one of the things that, principal duties and responsibilities, investigates and expedites return premium process. Investigates. That's the key word there. Expedite. Return premium process. Where's the investigation? Here's another criteria you got to have to work for First Insurance Funding. You got to be a problem solver. Then you got to be service-oriented mindset. Isn't that a bunch of crap? Been sued at the same time they were committing fraud against me. And they were looking for somebody. Oh, and by the way, the customer service representative that was handling my account, that told me basically to go off and forced me to pay for insurance that I didn't have. I think she got a promotion during all that. She passed me off to one of her underlings, would not take my phone calls anymore, and would not respond to my emails. And forced me to pay, as you saw, with insurance in the previous video, insurance for stuff that I didn't even have. So now I want you to look at this. This is another slap in my face. First Insurance has grown from a $300 million finance company to a $3 billion finance company. Growth that can be attributed to the company's deep understanding of the American agency system. I have heard nothing but bad reports on First Insurance funding. Do whatever you want to, but I wouldn't use them. If they allow an agent to do what was done to me, then why take the chance of using them? Now, you're probably wondering, because I go by Rubens Law. The reason, I'm not a lawyer. I'm a guy that started a trucking company with a little bit of nothing and did fairly well. In the state of Mississippi, you can see right here, Mississippi Code 81-21-21. Now this is all of this stuff is investigation and stuff that I've done after they put me out of business. The law reads, whenever a finance insurance contract is canceled, the insurer shall return the premium finance company as soon as reasonably possible. Doesn't have a date. Doesn't say a certain time limit or anything. It says that they have to return whatever gross unearned premiums as soon as reasonably possible are due under the insurance contract. Also shall furnish to the premium finance company a report setting forth an itemization of unearned premiums under the policy that includes a detailed mathematical summary of the computation of the return premium. That never happened in my case. That never happened. So, after I was forced out of business by these people, and these people, I went to my state representative and I was telling him my story, and he said, "Ruben, that sounds pretty damn serious." I said, "Well, I've lost my trucking company, I've lost my mother's house, I've lost everything." And so he calls down, gets an amendment to the law to 81-21-21. I don't know if you can read that or not. I am not going to take the time to put that and scan it in the video and talk over it and edit it and all that other stuff. So I was thinking that if this law passed, it would be called Rubens Law. And if it did pass, it would force the insurance companies, which basically would be the underwriter. They're the one that holds the money. It's not the agent. The agent is just a pass-through. They're not supposed to have none of your money. It would force the underwriter to send money out to the finance company within 3 days, which is standard practice anyway. But in the state of Mississippi, it's not a law. So this is why it's called Rubens Law. Because if it passed, it would be my law because of my case, hopefully. But nothing ever come of it. It was pretty much swept under the rug like everything else. There you go, Mike Chaney. Look at that. See that? I'm pretty sure, I was told there would be so many insurance lobbyists in the state of Mississippi you couldn't beat them off with a stick. And they would probably know about it before this draft ever come out. So that's why it's called Rubens Law. And if you're out there in trucking and you're looking to get into trucking, or if you're already in trucking and you're getting trucking insurance, do not use Southern Insurance Specialists, Hallmark Underwriters. Make sure, CRC is just a general agent. Any underwriter can use them, I guess. Don't use them. And for sure, do not use First Insurance Funding. Unless you want to go through what I went through. All right. Thank you.